McCann FitzGerald's series of summary briefings is intended specifically for in-house counsel and others whose work involves advising on or applying Irish law. Each video provides a summarised refresher on some fundamental legal rules, updates on new developments and practical guidance on the application of relevant Irish law with a focus on the issues that we see arising most frequently in day-to-day practice.
Over the past years, the EU has adopted more than 40 measures creating new rules for the EU's financial system. The European Commission is currently working on measures designed to improve access to non-bank financing in the EU. By and large, each of these measures has been prompted by the financial crisis. They are largely aimed at establishing a safe, responsible and growth-enhancing EU financial sector. Brexit will change things for EU financial services. However, we do not know in what way or to what effect. It could provide a positive stimulus to certain elements of the EU's financial services agenda. Alternatively, it could lead to some disruption and regulatory splintering. Brexit makes the case for a capital markets union stronger and more urgent. EU businesses need a broader range of funding options to grow and create jobs, and deeper capital markets are crucial for long-term investment. A possible option would be to establish a single common regulator for capital markets union responsible for overseeing the development of capital markets and ensuring the application of harmonised regulation across the EU. One implication of Brexit for the Capital Markets Union project is that it raises questions on the future financial ties between the UK and the EU. Can UK-based financial firms maintain their access to the single market? And, if not, how does this impact different capital market segments? Brexit is likely to lead to changes in the EU's access regime for non-EU financial service providers. Currently, that regime is a patchwork of different measures. Brexit may incentivise the EU to reach an agreement on a more streamlined, single point of access arrangement. The Single Rulebook is the backbone of financial sector regulation in the EU and the EU's banking union. However, the rulebook contains a number of national discretions, and these create the potential for regulatory or supervisory arbitrage. This is becoming a concern as member states compete for post-Brexit business. Delegation and outsourcing are two specific instances. Brexit may provide the impetus for a reduction in those discretions and, as a result, increased harmonisation of EU financial services. Alternatively, it may lead to greater lack of harmony and regulatory arbitrage. Brexit will impact the European supervisory authorities in diverse ways. Most obviously, it will provide momentum to the proposals to fund the ESSAs from industry levies, as Brexit will cut the EU's budget. Brexit may also lead to an increase in the ESSA's roles and powers, leading to stronger supervisory convergence. The UK has traditionally argued against conferring the ESSAs with direct supervisory authority, but Brexit will deplete the ranks of the member states seeking to limit the ESSA's powers in this respect. According to the European Commissioner in charge of financial services policy, the EU's ambitious plans for the EU's financial sector will not be set aside by Brexit. The Commissioner has reaffirmed the focus to continue building the Capital Markets Union, to complete a reliable framework for Europe's banking sector, and to stick to evidence-based rulemaking. While Brexit will be a real challenge, the hope is that it will provide a stimulus to realise such plans and such focus. However, it will require considerable endeavour and goodwill to bring this about.